Should be up on YouTube. Someone could post that link. I want to get this description off fast. We can look at these earnings names. I mean, not fast, the appropriate amount of time. I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Bam. Position disclosure. Bam. All right. SoFi. We got these SoFi numbers? SoFi's ripping. Affirm is ripping here too. Affirm. Looks like they beat nicely. Expanding their relationship with Amazon. Gotta love that headline for Affirm. Yeah, Wish is trading higher. That thing's been a dog. What's Bumble doing? Yeah, nice move there on SoFi. Nice move on Affirm here after hours. It's like the opposite of yesterday. It seemed like every name went down after hours yesterday. What's Disney? All right, Disney's getting smoked. Can't type. I love it. I love it. I love it. I love it. I can't say if I'm selling any stock because I'm on YouTube. But I got a game plan in place and I'm following the game plan, which is what you're supposed to do. You still don't have any numbers on SoFi? Young Patrick? Oh, my thing is not scrolling down here. SoFi Technologies, Q3 EPS, 5-cent loss, beats the estimate of a 14-cent loss. Adjusted EBITDA. Okay. And sales also beat. All right. No, I'm not seeing guidance there, but those immediate numbers look good. SoFi added 377,000 new members during Q3. Thanks, Shane and Pat. That's good. That's what they need. Growth. Okay. SoFi sees Q4 adjusted net sales. All right, that looks like it's kind of in line on the guidance. All right. All right. Sorry, I keep getting distracted, guys. Earnings season is so crazy. Their sales expectations are a beat also for SoFi. Did it make new highs here? Now pulling back a little bit off that high. This thing got hit today with this upstart smoke show. Anyway, let's start our meeting like we always do. I'll try not to get too distracted by some of these names that are moving here. Let's look at the SPYs. So, SPYs here down 0.8%. Oh my God. Who knew markets could go down? Q's down 1.5%. It's a crash. It's a depression. It's the end of times. IWM down 1.65%. Guys, again, you know, like I've been saying, we have to have some perspective here. We have been expecting the market to move down. We've been expecting the market to move down. And that's what it's doing. It's price correcting. And if you guys remember, I was like, oh, 460 is where I would really want to get aggressive. We didn't quite get there. And then Q's, I think I originally said yesterday, 390 is where I want to start getting aggressive. I kind of moderated that a little bit in the morning meeting today to say upper 380s. So that actually went to it pretty much on point. 387.53 at the low today. I never really saw intraday a solid signal to start getting aggressive, though. We kind of just bottomed out around 245. MOCs were on the buy side, so that gave us a little bit of a boost as well. What I really wanted to see, we can look at the IWM real quick too. Yeah, IWM is, down the most today. but it's closing like right at the ADMA. It's not even deeper than that. So, what I wanted to see was a actionable signal that is telling us we could be looking at a pivot low, and I don't really think I'm looking at that yet. Like I think I mentioned yesterday's afternoon meeting, like I would love if the market kind of traded down into this area, maybe as low as 460, and then tailed back up to give us like a continuation hammer type of thing. And even though we gapped down into the ADMA today, so take a half step back, right? We had a common gap down this morning. That common gap was filled in the first 30 minutes. So even though we gapped down into the ADMA on the daily chart, I didn't want to be super aggressive at that spot. So the good book of technical analysis would tell you in an uptrending market, when you have a gap down in a market that is no longer extended, that you want to come in and you want to be a buyer. This was technically a common gap down. We opened up right near the ADMA on the daily chart for the SPYs and the Qs. Common gap down to that upper band of equilibrium. Usually that is a very serious buy signal. So we've spoken about these last few days here, market's too extended. Let's see what type of price or time correction we have. And we started with a time correction, and yesterday we price corrected, and then today, off of yesterday's price correction, we continued with a gap down. It's the first gap down we've seen in what seems like ages too. And once again, that presents a potential buying opportunity. We know common gaps tend to get filled. We're in a bull market, so we expect the market to go up, so it's an even higher probability of that common gap getting filled. And for all the people who have been holding off on buying for like the last 5 trading sessions because the market's been too extended, you're finally not too extended. So again, the good book of technical analysis says come in and buy off the open today. And if you did that, it actually worked perfect. Common gap down, gap gets filled, the market then kind of goes sideways. And I remember remarking here into the VTF right when I got off the radio at around 10:30 today. I was like, all right, we filled the gap, we're going sideways. It's honestly a coin flip here. The reason why I did not want to be more aggressive at the open this morning, even though, again, common gap down, that tends to get filled, no longer extended in a bull market, was I still felt that the degree of the up move that we had might call for a little bit of a deeper correction than just the ADMA. So that's why I'm looking more kind of in the midpoint where, there was a little bit of a level, like we started to achieve more acceleration in the SPYs to the upside, where we started to go a little bit more parabolic once we started holding above that 460. So that's why I was thinking, well, maybe a little bit of a deeper correction into 460. And again, with the Qs, maybe a little bit of a deeper correction into that, upper 380 area, which is also where we really accelerated from. We really started accelerating from like 387. So that's kind of what I was thinking this morning. And even though we had that common gap down, I didn't want to be too aggressive off of it. But if you were, you caught what you should expect, which is, again, a gap fill. And then from that gap fill, we went sideways. And I remarked 50-50 chance here. Up because we're in a bull market, down because this market's still kind of in correction mode, and I think that this pullback is still a little bit shallow. Or if I could add in another 50%, which obviously doesn't make sense, 50-50-50, just sideways action. If anything, I thought sideways action was probably the highest probability at that point. But what did we end up getting? We ended up getting the deeper rollover, which I'm not surprised about. So for anybody who came in and bought the opening dip this morning because of the common gap down into the moving averages, you caught your move and you get yourself stopped out on the break of lows. And that's it. It's a good trade. It's a good trade. Anybody that came in and was buying stuff off the open today and you got your risk covered, just recognize that that's a good trade. You really had probability on your side. And then you get stopped out because we're working in a world of probabilities, right? And anything that can happen in the market will happen in the market given enough chances. And especially when it seems reasonable to me, especially with what the VIX has done the last few days, that this pullback could be a little bit deeper than just the ADMA. So I don't think any of this price action today should be surprising to anybody who is on the team. And once again, I think that as a kind of generality here, we did a really good job navigating the big picture. Now, the small picture, focusing on individual stocks, I do think was a little bit more difficult for today. I had some pretty decent day trades, actually. So today was one of those days where, obviously, because the market ended up being down, my swings cost me some money, and my day trading was really pretty solid across the board. We'll talk about the IPOs in a second, but my better opening drive type trade was Peloton early, and this Peloton looked great for a little bit here, and then the market weakness I think eventually got to it. But trying Peloton initially kind of off that opening low, again with the market being potentially on your side at the open, and I had spoken about this Peloton maybe is going to require 3 or 4 days before it could potentially catch a bid. And they even sold it into that news yesterday. So, the thought process there is any of the trapped sellers that are in this thing, anybody who wants to get out because of how bad that earnings report was and how much the stock has gone down, they've gotten out over the course of the last 3 days. And that's why it's very typical in the market to see like 2-3 day moves in some of these scenarios. So we really sometimes look for like that day 3, even for people who understand what like a red dog reversal is. A red dog reversal is really a day 3 or even a day 4, right? It's not just because it broke yesterday's low and comes back up after 1 day of selling. That's not really what the Oldensmith overthrow red dog reversal pattern is. It's after 3 days of selling, so they've really washed everybody out. They get the thing extended, and it comes back up. So, I did have Peloton on the radar again today, even though they sold the news yesterday, because now it's day 4. And I'm like, all right, market's potentially on my side, and it was off the open. This thing looked really strong. I think we saw a little bit of bullish option flow, and it ran into some selling up here that I really thought it was going to clear, and it never did. And part of the reason, again, was this market in the afternoon obviously got so weak that caused this thing to roll over a little bit further. But I'm still pretty happy with my trading on Peloton today and how that one worked out. So I was able to capture this opening drive and then kind of get out of the way a little bit, when those new lows broke. So that is Peloton, which was a great little opening day trade for me. I traded a bunch of Fubo today, and I don't want to get too deep into the weeds on it. I actually traded Fubo really, really well today. If I can give myself a pat on the back, my day trading for whatever reason was on point today. I was actually doing a lot of tape reading in Fubo. I don't like talking too much about my tape reading trades because I don't want newer traders to think that that's what they should be focusing on. I really think that newer traders should learn charts, and even experienced traders should focus on charts. Tape reading, if you have it as a skill, which I do from my earlier days in my trading career, can be very important in very specific circumstances, and otherwise it's just a lot of noise. But one of those circumstances can definitely be when a stock is circuit broken, which this was. So stock that's down more than 10% goes circuit broken for the rest of that day and typically the next day as well. So short sellers can't hit the bid. Short sellers are on the offer. So I was watching on several occasions Fubo coming down, and I would see where the seller was, and it was typically a refreshing seller on the offer, and then I would see this algorithmic buyer come in on the bid. And I don't know who's going to win. Is the algorithmic buyer going to come in on the bid and win, or is the refreshing seller, who's a short seller, going to win? But I know if the buyer is the winner and that short seller breaks, that short seller is going to be immediately out of the money, and that can lead to a squeeze. So I was able to come in on several occasions in Fubo today and have some really tight risk trades and capture decent upticks kind of off of it. I think one of them was it versus 2710 low? I honestly can't remember. I think it may have been. But there was a couple occasions where it was basically just like that, and I'm taking the offer with a buy stop. I have a buy stop above the seller. As soon as the seller breaks, I'm letting it trigger my buy stop. I'm getting into that position, and I was very regularly coming in and risking 5, 6, 7 cents worth of risk. I actually don't think I risked more than 7 cents on any Fubo trade that I had intraday today. So that worked out pretty well for me, to be honest. But this thing was garbage. Oh, man. I never got any real follow-through. Into the pops, I would sell 70% of my position or so, and I would keep 30% of my position for a bigger recovery because of how extended it is on the daily. And I kept thinking, okay, I just bought, 26.50 or something like that as this trade. Let me keep 30% of my position in case this thing's able to retrace to $28. And I was never able to get any bigger retracements. So I consistently would get stopped out of that last like 30% or so of my position, but I was making money on pretty much every one of those trades that I was taking. So really happy with my day trading in both of those names. And then Pat called out a little Roblox short day trade today, which didn't give much follow through, but again, position management paid me pretty well. He had the support here intraday at $100. I like Roblox. First thing I said to anybody who was looking to be long this is looking to short it with me is I want to be long. I want to be long. I want to be long Roblox at like $93, which it actually ticked to today. That's really where I want to start buying, and I didn't actually start buying. What's the low here? 93.02. I had to bid at 93.01 at one point in Roblox today to go long. But looking for that quick little scalp short, kind of caught this move, covered most of my position, got stopped out of the rest of it. Another profitable trade. Then the IPOs came around. First was the EXFY. Managed to make a small amount of money. I don't know why my charts on IPOs, I don't get the first 5-minute bar. It's some sort of glitch or something where I can't actually see the first 5-minute bar on IPOs, so we can't see it on here. But basically just a simple trade here, in EXFY, kind of an opening drive type of trade. I didn't get a lot of stock on it. I remember having an offer. Big Z here on the team, I think, called out that he sold some in front of 43.49. I was at like 43.74 or something like that, so I barely missed that high, and then it came all the way back down. So I didn't trade this one too actively. And similar with this RIVN. I bought, so they opened this thing at 105, sorry, they opened this thing at 107.83, put in a quick low of 105.80, I bought 107.25, and I caught the pop to this 119.45. So I made some money on that, and then I was telling everybody on the team, I was like, guys, don't buy this thing on the way down. This is one of these IPOs, and I won't get too much into it. I think I might actually film a video on it tomorrow. The IPO process is such a huge pet peeve for me because what they price this at $78, and even $78 is a super rich valuation, and then they end up opening it at like 108 or whatever it is. It's just such BS. No one gets the opportunity to buy at $78 on those really good IPOs unless you're a huge client of like an investment bank. It's just in my opinion, it's not right. But anyway, I'm going to probably do a video on that soon, so I won't get into it too much. But this is one of those things where it's like, I wouldn't have been surprised to see this at $150 at the end of the day. I wouldn't be surprised to see it at $85 at the end of the day. I got no idea. So I was able to just kind of take an opening trade on this thing when it first opened up versus the low. Got a decent price on it. It was just a pure risk-reward thing. I was like, you know what? I'm not going to take too much stock here, but I'm going to come in and I'll risk whatever it is, $1.50 on this in case they run it. And I remember commenting to Pat, like, if they broke this 120, some of you guys have seen those IPOs in the past where all of a sudden it seems like there's not even any offers anymore. And then they just run them huge. I remember the Beyond Meat IPO was like that. So that easily could have happened in this thing. And after I had all my risk covered, I just was like, I'm going to sell a little bit of stock every $5. And that kind of became my game plan on it. And then it rolled over and stopped me out, and I made money in it. And I did not fight this. I did not take another single trade in this thing the rest of the day. That's kind of what I was telling people on the team was don't fight this thing on the way down. Don't buy these things on the way down because who knows where this thing, air quotes, belongs as far as price goes. So, again, great day for me from a day trading perspective. Swings definitely hurt because I'm long the market and the market went down. So it's to be expected, but it's giving back profit from the run we just had, right? The market's just having a normal technical pullback here, so it's pretty much all she wrote. As a horror. Oh, the bond market. I didn't talk about the bond market. Yeah, the bond auction is what definitely helped bring us down here at 1 o'clock when that came down. You can see the immediate reaction here in the TLT and interest rates moving higher. But then this stabilized pretty well, and the market didn't. The market kind of continued its rollover a little bit. And just also, once again, in the same way that we just have to have perspective on this market, where the market just came from, and the fact that it's pulling back is really not that big of a deal unless you make it a big deal. Unless you're chasing price and buying everything at these super high prices after missing the move, then you're putting yourself in a bad spot. But even with this TLT, we got to have some perspective. You know, it's a huge sell-off, and that bond auction at 1 o'clock today really hit this. But all it did was bring us back to where we just broke out from 4 days ago. So yeah, so that's that. And I see Zahor here commenting that the lead managers in RIVN were Goldman, Morgan Stanley, and JP Morgan. Yeah, for sure. It used to be years ago that the Goldman IPOs were usually like the best ones. It would give you like that real pop on the secondary market as well. But I don't see that correlation coming in anymore. The incentives are perverse. I love the Charlie Munger quotes that he has. He's got several of them about understanding incentives. I know we've spoken about that here a lot in the VTF, whether we're talking about a hedge fund manager's incentives or an analyst incentives, or in this case, the underwriter's incentives. The underwriter's incentives, and this is my problem with the IPO process. I'm just going to do a video on this soon instead of doing a full thing here today. My problem with the IPO process is that the underwriter's incentives aren't in line to help market participants, and they don't even seem to be in line to help the company who's IPOing. You know, think about it. If this thing belongs at $106, if this is where it should have opened, then they should have priced it at $106, because the company would have made more money, and then when it actually opens for trading on the secondary market, everybody's on an equal footing. Instead, what you have, and we see this all the time with the good IPOs, is wherever it's priced, it ends up opening for trading on the secondary market at a significant premium to it. So the company itself doesn't get to raise the same amount of money that they would have otherwise. Regular investors or traders, people like us even, who are coming in to, trade the market, they're having to buy a significantly inflated price, and they're buying it from people who are making a huge percentage overnight. These people yesterday buying this thing at $78, and today they're able to dump it at 107. And sure, the underwriters always say to their clients, we really don't want you to sell it on the first day, but they all do. I know people who play the IPO syndicate. They all are flippers. They all sell the next day, and they make that percentage, and it's just a game. We'll run our business through Goldman Sachs, and we'll pay absurd commission costs in this day and age, so that you guys will then hand us an IPO that's going to be a good one, so I can make 50% with no risk overnight. It's just such BS. And again, that's who the underwriters are most incentivized to help, is their big clients. Anyway, that's all I've got. That's my little rant there. So I'm going to scroll back up into the VTF and see what questions everybody's got, or what names people want me to review, or pretty much anything else. Justin saying, can you explain negative EPS? Yeah, it's a simple concept. It just basically means that the company is a company that loses money. So for every share that exists, I'm just seeing SoFi, right? SoFi lost 5 cents per share. Right, that's the earnings per share. I guess you could just call it loss per share. They lost 5 cents per share. So every investor who owns a stock, that company, the company's losing money. So why would anybody own a company that loses money? That's a whole bigger conversation, right? Because that's been the game here in this market for at least the last decade. Is these companies are able to operate at a loss for years and years and years and years, particularly because interest rates are so low and raising money is so easy. And the whole idea here is everyone says they're the Amazon of this and the Amazon of that, and we'll just operate at a loss for years and years until we have a large enough of a client grouping or whatever, and then we can achieve profitability from that point. So that's basically that. And yeah, some of these companies lose money for years and years and years. Palantir maybe is actually starting to maybe turn profitable a little bit, but Palantir has lost money 20 out of 20 years that they've been in business. It's insane, and I forget, I don't know 20 is the exact number, but it's something like that. It's just crazy. All right, Robert here. what is the difference between an upgrade and a downgrade and when the stock gets an initiation? So I mean, the technical difference is an initiation is an analyst is like first giving a rating on it, and an upgrade is that they already had a neutral on it and now they're upgrading it to a buy, right? So there's already, the difference is that there's already been analyst coverage or there's not been already analyst coverage. For my purposes, there's not really a difference. Puts a stock in play in the same way. If a new analyst comes in, initiates a buy, and gives it a big profit target, that tends to have a similar effect on the stock as if it got upgraded and has a more aggressive profit target or something like that. Gabriel asking, with a gap down tomorrow, can we be aggressive? Yeah, let's see how big of a gap. Let's see where we're gapping to. Are we gapping to below today's low? Is it a big gap, or are we gapping down a small amount that's all going to make a difference? But I think if you had a larger, if you had a larger gap down tomorrow for some reason, we would need to first assess the why. Like, is there some news? Like, I know that there was chatter going around that the Evergrande default was happening or whatever, and that might be true even to some degree. So if you get some sort of overnight news, we need to assess what that news is. But if we're talking about pure technicals, if you had a gap down to 460 tomorrow on the SPYs, I think that would call for being aggressive. But I think we're better off assessing that in the morning. AMC CEO Adam Aron files to sell 1.25 million shares after warning meme investors he would do so. He is not an ape. Sahil, I made money today, but the majority was just scalp trades in RIVR and EXFY, and I kind of feel bad that majority is made not with any idea or pattern, but just momentum or luck. So, look, the first thing I would say to you is any way you can make money, make money. If you can make money consistently with any approach, it's a good approach, and I don't care. I am not I'm not a believer that you have to trade my way or you have to trade one way. You have a way where you can make money, do it. That's what we care about. You figure out that edge. Let's figure out how we can take that edge to the next level. Let's figure out how we can add scale to it. Let's figure out how we can do it bigger. So that would be the first thing to say. It's like Bruce Lee said, right? Be like water. The way is no way. All that good stuff. The second thing I would say to you is a couple of you guys were making me a little nervous when you were telling me that you were scalping that RIVR. I'm very concerned that the risk reward on your trades wasn't worth it, and it just so happened to be that momentum was coming in and those trades were working, so it didn't matter. I don't think that RIVR was a name that should have been scalped. I think that if you were buying that, you're putting on the risk that the stock could have gone against you so quickly and so rapidly or spread down so fast that it doesn't justify the reward of quickly scalping out of the position. And I wasn't scalping that thing at all. I took my one buy, gave it $1.50 in room, had my stop loss in, and then I had a game plan where if what's the symbol? RIVN? Oh, I'm on a daily chart. That's why I'm not getting any data. I had a game plan in place where if this thing wanted to run, let me just do some math in my head. If this thing was going to run to $160, that's where I probably would have ran out of stock. I don't know, but I'm getting the reward for my risk. I can tell you that. And I literally at a certain point was like, okay, I'm just going to sell a small percentage of my position every $5, and we'll see what it can do. And like I said before, I wouldn't have been surprised to see this thing trade down to 80. I wouldn't have been surprised to see this thing trade up to $150. Who knows where this thing belongs? Who knows where it belongs? It's you're gonna value this thing? Did they even have a truck yet that they've actually made? But Amazon owns 23% of the company, and for me, the biggest part of the bull thesis was what's going on between Jeff Bezos and Elon Musk that I spoke about in the morning meeting. I think that Jeff wants any company that he's involved in that's competing against Elon Musk for that company to go to the moon, right? And that's how he can wage his war. Who's the richest man in the world and blah, 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 blah. Who's going outer space first? Who's building the bigger, better electric car? All this stuff. So for me, that was the most bullish thing about it. and that was why I was willing to buy it. And my understanding was Amazon holds 23% of the float. They're not selling. It sounds like allocations were difficult to get from the investment banks, so that's all the bull case for this RIVN that made it worth it for me from a risk reward perspective to take that $1.50 risk, and see what it can do. So it was good. Yeah, Firm looks like it's crushing it after hours here. So is SoFi. Ooh, Firm all the way up, all the way back up, all the way back up. SoFi all the way back up. Very nice. Okay. Yeah, it's weird, Oreo. I don't know why. Next I'm seeing here is from Robert. Would you agree with my thought process today, with today's thought process together with my game plan on Microsoft? CPI numbers were higher today, which should be negative for tech. Yes. Right? Because so inflation being higher means higher probability of us seeing faster interest rate increases, or having to raise interest rates in order to damp down that inflation, and therefore that's not as good for tech. We can make an argument on what type of tech, but we can definitely say broadly tech. So your thought process is definitely right. And we got TLT gapping down on the open, which is correct. So interest rates up. So we're expecting probably some weakness from tech. So Qs are also opening with a gap down. We know the whole market gap down this morning. If we will not break yesterday's closing price, we might sell off. If we don't break yesterday's closing price, we might sell off. If my game plan for Microsoft was trading short below 334.44. I'm short before 334 through 334.44. Okay. Let's try to figure out the why. I see it. Just basically this support from the last 3 days here. This is the lowest point of it. Okay. I like it. Support from the last 3 days. My game plan was trading only if we stay below 334 as confirmation. I started shorting at 120 all the way to the low of the day. I don't really understand the last part of what you're saying. You started shorting at 1020 all the way to the low of the day. Okay. So there's a few things here that I really like that you're doing. First of all, I like that you have multi-level thinking. I like that you are using if-then statements. I'm a big believer when it comes to trading in utilizing and analyzing just basically if-then statements with the market. I do it for myself all the time. If this happens to the market, then I expect the following to happen for the following reasons, right? It's a great thought process exercise. So I love pretty much everything you're doing here. I love your short. The only thing that I think that you are maybe getting overanalyzing a little bit or whatever it is the holding below the 334.44. So you got this whole thought process and why Q should be relatively weak. It all makes sense. You've identified the support level that you want to short through. I would say I don't love the name selection, but it's probably because I'm biased on Microsoft. I'm such a big fan of the company. But technically, your game plan is totally sound. I don't think I would have waited. I think I would have shorted this from at the first time it broke. I don't think you want to wait for it to be holding below or something like that for confirmation, because you're just going to get a worse price and a worse risk reward. And I know you said that you didn't start actually shorting until 10:20. I don't fully understand that either. I think that you should have been shorting this through 334.44 or whatever your price was in the first bar of the day, with the stop loss being the high of the day, assuming that the risk is appropriate for you. And that's it. Just shorting on the break of the level and not kind of overthinking it outside of that. Josh already saying he likes SoFi for a trade tomorrow. Yeah, I mean, I know we were analyzing this bullish pattern up here, and it's this crazy blip in the radar, but let's look at it again tomorrow. This thing being above 23 is solidly bullish, but keep in mind, my price target on this thing that I've said over and over again has really just been $24. So for me, if I take that, that's going to have to be a fully new trade, but I'll assess that in the morning. Oh yeah, tomorrow we have Veterans Day, so the bond market is closed, which is interesting. Ride getting a Foxconn deal? I'm not familiar. What is this Ride? Oh, this is that Lordstown mortar. Next here from Ernest. Greetings, DBX. Dropbox. Pat's been a Dropbox expert. Ooh, not good. It pains me to type this stock up because I got stopped out of a big swing at the low here on 513 when it broke these lows here on this day, and I missed this whole up move. Really unfortunate. Still trading above that even with this sell-off. But anyway, let me read your question here. DBX rolled over a bit after the earnings report. I'm assuming the earnings report was 3 days ago. Was this first down move? It's interesting it traded with even more volume today than it did on that day. Am I right, Pat? DBX earnings was 3 days ago? Not today, right?
Yeah.
Okay.
There's like a weird sell today for the 5-minute chart.
Weird sell-off on the 5-minute chart. Oh, wow. Yeah, that somebody was liquidating a position at the market. Okay, so you got a trigger at 2683. Okay, so you got a trigger. I assume when you mean trigger, you mean some sort of alert, where a previous buyer support showed up. I didn't take the trade as the move jumped to the mid 27s. Yeah, this was probably a very, very fast move. So what this probably was actually a market order, which is kind of crazy. You don't see that very, very often anymore, where somebody who's a big player just says, I need out, and just does a whole market order and swoops all the way down. But what usually happens when that does happen, when a big market order comes in, this low gets filled back up very fast because the market order's gone. It took out all those bids, and then those bids kind of swoop back up. So then maybe it ends up rolling back down and making new lows eventually. But at least that initial sell-off is usually there and gone very quick. So you got to really be ready for it when your alert's going off or whatever to recognize what's going on and take the offer very quickly. It seemed to fade the rest of the afternoon. Any comments on jumping to play capitulation fast enough to make a swing? Yeah, so I mean, those are basically my comments on is you got to be super fast on it. As far as the swing trade goes, then it would depend on where it closes. And this thing did not close well. I would not feel comfortable swinging this to the long side if I entered it today. It just broke below a major support level. I don't know what the earnings numbers look like, but this is a bear flag, right? So obviously big negative Maribozu on the earnings report. This is an ascending bear flag that then breaks down and gives continuation today. I get it that there's some previous levels around this $27 zone or whatever. I would not be looking to come in and buy this yet. I think you need more clarity on this. It needs to prove itself. Your 200-day is still rising, but this is a bad pattern and had a really bad day today. So I think just be a little bit patient with this DBX and get a little more clarity from it. So that's that. Next here from Sebastian, you check GSL. This GSL looks great. What is this? Great relative strength today. Global ship lease. Oh, okay. What's the other big shipper that I trade sometimes? Sting. It's TNG. Yeah, different space, I guess. I don't know the space too well, but this GSL chart looks beautiful. I love the relative strength. You got stopped out at lows at 25. Okay, I feel like this happened to you the other day too, where you were trading like, versus a previous resistance level, expecting it to hold a support, and you got stopped out kind of near lows. I'm really sorry to hear that. I'm sorry that happened to you twice. The issue here, and I think what happened once again, is because your stop loss is above the 80 MA on this time frame. So whenever your stop loss is above the 80 MA on that time frame, I'm not saying don't do this. I'm not saying you did the wrong thing either. It just means you have a higher probability of getting shaken out. So the first thing I would say to you is I do not think that you did anything wrong. I actually think you did everything right. Great looking chart, breaking out, showing relative strength. Gotta love the relative strength on this thing. You're utilizing the previous level as your stop. You're doing everything right. But you got shaken out of the trade because the 80 MA wasn't at your stop loss yet. And it's unfortunate. I think that if you did this consistently in the long run on like a trade specifically like this, even with the 80 MA not caught up to your out yet, I think that you're going to make money consistently in the long run on this. It just so happens that with this one and the other one you had recently as well, you got pushed out of both of those. So, sorry about that, Sebastian, but you're definitely doing the right things. Stephen G. Disney, gapping down, would it be wise buying? Would it be wise buying, risking off 165? I didn't actually look at the numbers. There's a big support zone in this thing, though. It kind of comes down to that 165, and it put in a low here of 165.12. So yeah, you could try to be long. I don't know when you asked this question where it was trading at that time, but you could try to be long Disney versus 165.12. I wouldn't buy 170 versus 165.12. It's too much risk. But that's going to be your key spot to pay attention to for tomorrow. Next from Sam, SPY correction zone to 458, 460. Yeah, I'm looking at like 460 as well, but your zone makes perfect sense. Yeah, so let's analyze the price action when it gets to that price, Sam. I would love to see, like I was saying earlier, it come down to that price and then give us like a continuation hammer. And that can be a signal that it's actually time to buy the dip. So let's see what the price action looks like when it gets to those prices. If we have another down day tomorrow and we close at lows, then I don't like buying at 460 if the market's closing at 460 at the end of the day. I would wait for the next day further because it could tell you, I mean, we could pull back to 455 and still be healthy. And if you're just buying at 460 because you think that's the spot, you could be generally right, but it could push a little bit further than you're able to handle before you actually get the pivot. So let's watch the price action when it gets to that spot for more clarity. But that's exactly the zone that I'm looking at also. Next here from B. Henry. In general, if a name like SoFi is up in the aftermarket, does it hold up first thing in the morning? Sorry for a newbie question. First of all, questions of all caliber, all experience levels are very welcome. This is how we all learn, so no apology, please. If anything, I really want to encourage everybody. It doesn't matter your experience level. If you're asking good, productive questions that are enabling you to learn, someone else probably has a similar question. We're working with people here who are professional traders at T3 Trading Group primarily, but they are of all vastly different experience levels. Some of you guys are recent college graduates who are just learning trading for the first time and just getting your career going. That's great. Some of you guys have been trading professionally for decades, have $1 million accounts, are former fund managers or traded in the pits or the floor or whatever and have decades of experience. So again, all questions, please don't feel like you need to hold back on anything. So right now, to answer your newbie question, which is fine that you're asking, SoFi is probably going to be capping up to this area tomorrow. It's trading on a news event, right? That's why it's up to $23 when it closed at like $21 or whatever. So it's up a couple dollars here after hours, and most likely it will open up up there as well, unless it trades back down. Why would it trade back down? Maybe they say something bad in their earnings call or something like that. But yes, we should expect to see this SoFi, at least based off the information that I have now, opening up in this $23 area tomorrow. So that's that. See ya. Zahor sold SoFi November 12, 24.50 calls. Okay. Good luck. I really don't have any other comment about it. Robert, following up on Microsoft, on his Microsoft question. 10-20 short on Microsoft because the Qs fade the gap all the way up. Okay. Yeah, for sure. I like that. I still like your thought process. I still think you're overthinking a little bit, but I like I said earlier, the extra pieces of information that you're kind of looking at there. The Rick asking about Dash, shorts on a Dash short. Yeah, so this company blows my mind. I have no idea how this company is worth what it's worth up here. I don't understand it at all. I think that the food delivery business is a terrible business to be in, kind of in general. But the stock's been holding up really well, so the market's smarter than I am. They gapped this thing up really big today because they bought out another company. I've seen this before, and I also don't get it. So you tell me you got a business that doesn't make money and has no real path to profitability, buying out another business that doesn't make any money and has no path to profitability, and now we have a great company where the stock should be even higher. I don't get it. So from like a qualitative fundamental perspective, I love the idea of shorting Dash. From a technical perspective, I think it's a difficult trade. I think it's a difficult stock to trade, period. And I don't know where you're going to utilize as a stop loss, considering that you'd be looking at it tomorrow after today's move. Because I don't like shorting 214 versus 230. It's too much risk. So generally I like the idea, but we just need a technical concept to come in to enable you to actually do it. So that is Mr. B. Henry. Next here from Parker 1231. Any thoughts on HPE over 1560? Is it overextended? Hewlett Packard. It's a little bit extended. You know, it's not too extended, but it's also not a momentum name. So, you know, when I'm analyzing if a stock is too extended or not, it definitely depends on the type of stock we're looking at, because not all companies are created equal. I mean, Hewlett Packard is not, you know, what I would consider a robust modern tech company or anything like that. So because it's not that way, you wouldn't expect it to be a real momentum name that can get very extended. So it's a little bit extended here, but not so crazy. You got a big resistance zone here, and it had a great day today also. Love the relative strength that this thing put on today when the market was weak. So there's a bunch of things here to like if this thing starts clearing this like 1560, 1570 resistance that you're talking about. So I like this broadly as a long. Not usually the type of stock I'm looking to trade because it doesn't really move well enough. But again, you know, I do like the idea there for sure. Next here from Javad. How low do you think Tesla will go? I'm trapped short since 900. Okay, first thing I would say, don't get trapped. You got to have risk management ahead of time on any trade that you put on, and that is especially so on the short side. It's especially so on the short side. At least on the long side, you know your worst case scenario is 0 and you lose 100%. On the short side, you can lose 100% and 100% and 100% again. So, you know, honestly, most of my bigger losses I've had in my career were to the short side. So keep all that in mind. You know, the first thing I would say to you is don't get trapped in the first place. But I know it doesn't help you now. So where do I think Tesla can go? I don't know if you were in yesterday's afternoon meeting, but somebody kind of asked me a similar question, and I really said I don't know. And I'm sorry that I don't have more clarity for you on this, but this name has just been so insane. From a technical perspective, the pullback that it gave into today is probably all you should really expect from a just pure technicals. Let me look at the weekly really quick. Yeah, you know, we touched the 80 MA on the weekly today. So I think from a pure technical perspective, today's low on this pullback is all you should really expect. It doesn't mean that it can't go lower though, but it's going to have to build out some sort of pattern first. Let's see what the snapback looks like now that's back in this equilibrium and it builds out a wedge. You're competing against some powerful things here. On the one hand, if the Momo buyers and the option flow buyers start really coming back into this name, this thing could be right back at highs before you know it. On the flip side, if Elon Musk sells $10 billion worth of stock, well, it's probably going down. So I've got like no feel on this Tesla right now with where it's trading. But from a pure technical perspective, I would say that today's low is all you should expect from this pullback. So if you don't have a game plan in place for risk management already, and you're kind of just in hope and pray mode, you got to put yourself in a game plan for risk management at this point. Where are you giving this back to? If it was my trade, purely based on technicals, I don't know what your account size is, I don't know, you know, what you can afford risk-wise, I would not give this thing back to above the negative Maribozu high that it broke down from yesterday. So if I was trapped short or whatever, or I was just short period, my stop loss right now would be yesterday's high, which is a lot more room to still give this thing back. So I hope that helps. Next year from Damien. I bought a decent amount of Qs, and I almost caught the low of the day. That's always nice. It was definitely right into that area that we were talking about. And I almost got the low of the day. Initially, I added a small amount around 2:30 p.m. I added a small amount around 2:30 p.m. When the VXX gave us a shooting star. I love it. I love the thought process here. Even though I don't see the shooting star, I love the thought process. On a 5-minute? On a 5-minute. I don't actually see a shooting star. But again, I like how you're thinking. Then I added a significant amount when the VXX gave us a lower high at 305. Let me go back to the VXX. That's this. I love it. I love how you're looking at these things in conjunction with each other. What percentage do you think was appropriate to hold overnight in this scenario? Well, that really depends on how much you covered and how much profit you have. So let's just assume you said you almost bought the low today. Let's just assume your average price is, I don't know, 388.25, and it closed at 389.69. It's not even a full percentage point. I wouldn't, and we didn't close great. I would not be keeping a large percentage of that overnight. If I kept any at all, it would be a small percent. I probably would want to keep a little bit if I was you, but it would be 10% of my stock, something like that. And that way, if you sold 90%, that profit cushion, if this thing gaps down below, if we gap down tomorrow below today's low, then even in that scenario, you should still be okay because you had sold 90% of your position and you're so light and you can reassess. So that's kind of what I would be thinking there. Not a big enough of a profit cushion to swing it heavy. Next here from JC. If a stock is both circuit broken and easy to borrow in the level 2, do you need a short locate? No, you don't. But you can't hit the bid to get short. You have to offer out to get short in a circuit broken stock. Ricky saying DoorDash didn't deliver my order the other night. Short it. And Sahil saying that DoorDash's Dasher always eats my food. Oh, it's too funny. I thought Elon did sell. Elon's brother sold. I don't think Elon sold that stock yet. Unless he was the seller yesterday. I don't think he sold that stock yet. All right, gang. We got one more here from Tommy Pham. Do you trade the bond market or the TLT? I don't trade the bond market. I will trade the TLT, but not often. I look at the TLT almost every day because it's an important proxy layer of probability and helps me understand how the equity market moves. And I have traded the TLT in the past. I find it difficult to trade because it can be very gappy. I don't like things that are super gappy overnight. But I've traded the TLT in the past. I don't go to it super regularly, but I will occasionally, to answer your question. So I hope that helps. But again, even as not trading the TLT, I'm watching it every day, especially currently. It's been a really important piece of information to be looking at to understand where the relative strength and relative weakness should come in for stocks on that day. All right, gang, I think we covered it. Everybody have a great evening. Little market correction today, but it's still fine. It's still healthy. Have some perspective. I gave back some P&L today on my swings. I had a little bit of a down day today. It's okay. My day trading was great. I got a couple companies here trading in my favor after hours. So see everybody tomorrow. Have a great night.